Hi, everyone, and welcome back to our Market Mamas channel. So, today is a bit of a controversial topic for all our traders out there. If you day trade, and even now swing trading too, then you probably have at least heard of using funding companies for capital to trade with, if you haven't, in fact, used them yourself. So, we've heard the debate on all sides of this method for trading, and it is our turn to weigh in on the discussion.
Right. We certainly have from all the perspectives and considered it ourselves quite intimately. Futures day trading is our niche, and the system is widely discussed in our circles. And to be clear, let's start with some background and fact. What is even a funded trading company? So trader funding companies, also known as prop firms, are basically institutions that will offer large account sizes to paying members to provide them with higher purchasing power and financial leverage to trade the more liquid trading instruments. So this enables traders to take more significant advantage of the markets than they otherwise might be able to do on their own. For example, there are trading platforms for retail traders that require $13,000 to trade one contract of ES futures. So while that's definitely more on the higher end of the platform fees, it can not be so far from the norm. So with a $50,000 funded account, you can trade up to 10 contracts at a time as long as you follow their rules.
Right. So it's actually like so clever on their part. I wish it was my idea 10 years before this opportunity existed because I love it. They're probably doing very well. But essentially, so they are the third party entity that backs your trading executions. They provide the startup for your trading growth. And in return, they have fees. So let's break that down for a minute. So to buy an evaluation account, you spend anywhere from $30 to $100 depending on the deals at the time and the firm that you choose, as there's really many options with slight variations among them. That gives you the ability to then trade that account with no more cost to you. It is an evaluation account, however, that's where you start. And so the wins within there are not yours to keep. You have to win enough to show them consistent profitability, and that is how you earn access to a performance account. So here's the next fee, and that is 3 to 4 times the cost of an evaluation account. But once you earn and purchase this performance account, then every amount that you earn in that account is live profits for you to eventually withdraw. The trick of it is that you have to maintain a safety net within your trading by executing reasonable and sustainable trades over time. More on that in a minute. But once the profit side of this performance account level you have reached, once you get there, is it all set? You're all good to go? Well, so there is many different levels to this at this point. So there will generally you get all of your income for the first 10,000 to 25,000 worth of your profit account, depending on the company and the account size. But then once you are truly consistent and you've earned greater than that, say $25,000 in your performance account, then they do receive a percentage of your profits, varying from 5 to 15%, depending on the firm. So always keep that in mind when you get higher levels within your prop firm. But this fact, it doesn't surprise me. I mean, the financial backers to any business get a cut. Think about a financier of a restaurant. He gets his percentage of the profits each month because without his support, the restaurant might not be able to operate at all. So our business just happens to be trading. So they're the financiers of our trading business.
Yes, that was a great breakdown of the how. But more of the debate comes in when you really consider the rules and requirements of their traders. It's not all sunshine and roses when you just win every day, every trade, and reach payouts in a quick order. That's just generally not the norm. So how do they protect their capital then? Well, that's the trailing threshold. Say you are trading a 50K account with a trading funding company of your choice. Ours is Apex Trader Funding. Then the trailing threshold with them is $2,500 for a $50,000 account size. This means that while you're working towards the profit target on that account to qualify for a performance account or a PA, you can only lose up to $2,500. Less the transaction fees with every trade that you pay, and still get to keep your account. So essentially you are trading $2,500, not the full 50K. This rule makes risk management very critical. It's not sustainable to ever have an ability to just trade with an unlimited risk level. And they, as the financier for your trading, they don't allow that either. So some companies even have a daily max loss limit, for example, $1,000 to help keep you trading another day. But then that also limits you from potentially getting those losses back within that same trading day. So if you do lose a full account threshold, say that $25,100, then the account blows or is exhausted, as we like to term it. And if you will no longer have that particular account. So if you do want to trade more, you will then have to go in and try again and purchase another account. And if this was a performance account that you lost, then you have to start the entire process over again with a new evaluation account. So there are more rules, but those are the main ones. For those of you who trade these accounts, every company, has instructional videos with the exact facts for you to study and do your own due diligence with. Also, trading with any kind of account is inherently risky and should only be done having received some quality education, practice and simulation, and honed a trading edge for yourself.
Yeah, totally. I definitely watched many videos and read the frequently asked questions for a few different companies before I bought my first evaluation account and started in this world, because it's kind of a bit to understand initially, but with time and interest, you can really pick it up quite quickly. So what does this all look like and feel like to the trader? So when I started trading in 2021, funded trading companies were still pretty new and I wasn't aware of them enough to consider it as an option. So I started trading with a large and reputable platform with my own money as the startup funds. And to make a long story short, I was a baby trader with no real edge and a whole lot of excitement. And I was rapidly humbled by Miss Market and took some solid losses after my initial lucky wins. I just didn't know enough to be risking my hard-earned money, and it was a really hard reality check. And so for a while, I took breaks. I dabbled in all kinds of methods with such a devotion. I held to it. I studied my mentors. I swing traded. I learned the options. I traded micro contracts to gain skill, but with less risk. So all sorts of pivoting moves in there. And through this time, I did learn a tremendous amount. And that led me to progressing to a more advanced mentor. And he really taught me a strong trading edge. But through all of that, I also burned through several $1,000s of my first account. And I mean, that sucked. I'm not going to lie. I get why early traders quit. It hurts to get knocked down and continually just keep trying. That grit and perseverance is something that not everyone has. And it's what had me not throwing in the towel, but I pivoted time after time and I just stayed at it. And so as my trading improved, then I naturally started hearing more about trading funding companies. So I did my due diligence and I selected Apex Trader Funding winter of 2022-23. They are the account that we have the most personal experience with. So the reason why I ended up going this route instead of building back up my personal trading account is that I really had been humbled too many times. And when I would have a losing tilt day where I couldn't trade well to save my life, that 1 to 2,000 potential lost dollars, that was all money that I lost of my hard-earned money that I put in there from my bank account. So that was a big sting. So when I switched to Apex, if I had a really crap trading day where my demons or insufficient skills for that market that day led to losses, I didn't lose $1,000 to $2,000. I lost, say, $33 that I paid for that evaluation account or $140 that I paid for that performance account. And I mean, I did lose a week or two worth of work. It sets you back at the beginning, but it's still an unpleasant lesson in that world, in that frame. But financially, you get my point. The impact is much less. So for me, as an early to messy middle level trader, this was a serious benefit to both my psychology growth and to my personal finances. So in this way, funding accounts are protective. You have skin in the game with them, but sustaining heavy losses when there is no third-party rules on top of you, that doesn't happen for me anymore.
Yes, I similarly experienced losing thousands of my personal capital with various asset classes before making the transition to focusing on futures trading with funded accounts. So since then, this approach, it has kept me in the game as I've continued to learn, practice, and refine my trading edge. This is a solid pro to trading with prop firms. I recently got some feedback from another trader who said he liked funded accounts because you don't have to risk your own capital while getting your trading legs settled. He mentioned that another benefit was that once you do get the hang of it, you can do trade copying on multiple accounts. So it can be good for folks who know how to trade. Another pro is that a lot of these firms offer a community, Discord groups, and helpful resources. As we've discussed in previous episodes, trading can be very isolating. So having other traders to connect with can be a boost to your trading morale. Purchasing the right to earn a funded account through these firms can very much be looked at as an investment in your trading career. And it's just part of the overall tuition that we all pay to the market one way or the other. In the best case scenario, funded accounts can offer a limited downside, which is the money you spend on that eval account and or the performance account fee, with limitless potential to the upside. Granted, you can grow that account consistently without ever violating the rules. So it's a very lovely setup, just like Miss Market. However, it doesn't always go up straight to the target. There are many factors that are still in play and moving parts to be managed.
So it sounds great, right? Trade with someone else's capital and only take small fees as your financial loss if you manage your daily trading business poorly on a given day. So then why do funding companies get so much shade? Okay, so what do the haters have to say about this? I mean, there are risks with this also. Let's give credence there. And in a lot of ways, when your financial risk is mitigated in this way, where the company you signed on with will forcibly cut you off and control your personal monetary losses automatically per their rules, it can cause a bit of a disconnect. Losses don't cut as deep. You can become a bit complacent with your discipline, and this can create habits around those poor choices, loose risk management, and trading heavier size than you otherwise maybe really are qualified to be messing with based on your actual skill level. It can take away the natural evolution of you as a trader had you not gone that route. You can feel the leveraging up as less tensely as you might, as given with the accounts that you bought. In this way, utilizing a funding company to trade with can actually slow your progress to consistent profitability by creating room for poor habits to take root. I get that. Another perspective on these accounts is the idea that the house always wins. So this is really a fair point. Your funding company is always paid, no matter what their traders do, no matter what we do. They get the startup fees for all the accounts directly given to them. It is literally like you buy an item. You get a chance to do your best work and they get paid from your fees, similar to like paying to play at a casino. So with the early to middle traders often not yet having a consistently repeatable winning strategy, there are always account resets and fresh starts. Sometimes even within the same trading day, it literally, you guys, it only takes 5 minutes to buy and then be trading a new account. So if you are in a full trading trance, you guys know what I'm talking about, then you can go through many accounts even in one day. And often this is not a green day. With that type of energy at play, it's usually not going well. And as Kendra mentioned, the biggest part of this leverage, you can trade copy. So this varies company to company as well, but you can link multiple accounts together so that every trade you execute is copied and simultaneously executed in up to 20 accounts at the same time. So this can really earn you more money faster and faster with sweet trades on green days. So let's say a $500 win from one trade. That's a $5,000 win if you only copied that to just 10 accounts. Amazing, right? But if you're having a struggle day, you can also potentially lose 20 accounts in one morning. Whew. And that is some quick and easy cash for the house, right?
Right. There's no way around it. The funding companies will only get wealthier with this business model. So kudos to them. The truth is in the numbers of, so does that make them bad? Are they the drug dealers on the street corner that offer a 5-minute high and they're just selling us all a dream? Are those quick and easy accounts just cheap enough to have you swipe your credit card one more time and not really realize how fast those fees are adding up until your statement comes in at the end of the month? Does the quick and effortless resets offer that slick dopamine that hits us and just becomes a vicious cycle? They're clear about their rules right out the gate, but they won't stop you from purchasing yet another account. There's no smoke and mirrors, but they don't need to because, we humans, we're often our own worst enemies. They offer sales and ease of access to their accounts. Their system has bugs from time to time, but they really work hard to keep it running very smoothly. They want us to trade, much like how the casinos, keep the temperatures very cool and they're designed to engage our senses. I mean, how can you say no, right? They choose, there's other traders, of course, though, who don't choose these methods, who have decided to choose brokers with lower margin requirements and then take their time building, a small account up with stable leverage and growing their accounts independently. So this is absolutely a method of becoming a profitable trader and how it was always done for retail traders, before there were these funded accounts. So that is certainly an option and a very sound method of becoming a profitable trader as well. So I can share a personal story of my own about funded accounts for myself. So I did feel at a time that they were negatively affecting my trading and it was a source of overcomplicating my process. It can be easy to get fixated on the profit goals, the numbers of days you've been trading a certain account that are required to pass, wanting to get trades on multiple accounts each day, basically focusing on the P&L and account statuses more than just the act of trading and following your process every day. So it can be tricky, once you have multiple accounts that are at different levels, you're trying to strategize how to trade that account based on, your amount of threshold you have left or how close you are to passing that account. So I simplified and I went back to just trading personal funds. And I built up some progress in micros, got some confidence enough that I decided, okay, I'm going to play full size now because, things are going great. And long story short, I lost it all in one day. And so I couldn't help but feel that sting and the fact that I couldn't blame it on funded accounts. So it was my own lack of discipline. And I also definitely had the feeling and the thought of like how that money would have lasted me a hell of a lot longer in eval purchases. So case in point, funded accounts or not, you have to respect a risk management system or you're losing one way or the other. Individual accounts, you can trade that sucker into the ground on any given day very quickly. Funded accounts, they offer a built-in risk management, but only if you develop and honor your own system in purchasing and resetting to make that sustainable for your own personal finances and realistic for where you're at in your trading journey.
So that's the crux of it all kind of laid out. Let's make some final points here on the title of this episode. So are they an opportunity or more of a scam? So here's our take. Trading is an incredibly financially risky pursuit. You have to study endlessly in your market of choice and really learn a true method behind how she swings and gain confidence and experience to learn how to capitalize on it all consistently. This is not a small undertaking. It takes years. So what is the best way to journey through your evolution and level up? The answer is just not going to be the same for everyone. We're all a little different. I truly see the benefit of trader funding companies for retail traders such as myself. But as with any aspect of trading, you'll gain the most benefit by utilizing them as a resource to be leveraged with moderation. So when you trade, is it important to honor your discipline with your stop loss management and with your position sizing? Of course it is. These are core essentials to a real trading system. So take that approach with funded accounts. I'm asking to myself as much as everyone, slow your roll a bit. Just because you can buy endless accounts on a day and trade with 10 contracts at a time across 20 accounts, do you need to? Like, break down how much money in wins a day will really change your life and then reverse engineer that. I did this and it was really helpful. You can see that a moderate amount of points in a few PA accounts is seriously impactful to anyone's bottom line. All of us retail traders out there, that money will matter. That legit moderate account growth will compound with time if you can manage your impulses and not rush. As with all aspects of trading, there is a power for the longevity and large successes with patience and peace with a steady pace and strong risk management. I, for example, have had to set rules recently for myself with how many evals I will buy per week and how many contracts I will trade each day, depending on the setup, and never depending on how much my company will authorize me to, because I am ultimately the CEO of my trading business. So my rules have to be the bottom line. Have I learned these essential lessons from my trading energy the hard way due to my stubborn personality? Hell yes. Hell yes, I have. But with this perspective and personal responsibility requirement that I fully acknowledge, like, how can I hate on a funded company? I just can't. They are putting me in the driver's seat with significant opportunities at my disposal for really a menial fee. The issue arises when I fail to control myself. That is not their fault or their responsibility. I love trading and I'm always improving my strategies, both at my charts and with my finances surrounding my trading executions. So I've learned over time my tendencies within this world, and I recognize my independent authority over my actions. So this is a privilege that I am learning to utilize in the best possible way to serve me, and it's working.
Yes, I agree. We all get to design our own trading strategy and approach that is unique to, but most importantly, serves us on our path to consistency. Like Becky said, if you can manage yourself, then you can certainly use funded accounts as a less riskier way to trade the markets. However, it does add a layer of complexity that will also take time to work out. So as always, let's continue to do that work. And we're so glad you guys joined us today. Tune in for this discussion with Market Mamas. This is an important topic for traders. It's a very readily available opportunity in our world, and it's quite different from trading your own money. So we hope we did justice to this debate and would love to hear your feedbacks, your thoughts, your opinions. We love a good authentic dialogue session. And if you want to connect with us more personally, check out the links below for our socials, our website info, access to our merchandise. If you're all interested in funding companies, we also provide a coupon code in the link that will get you the best current available rate on multiple account sizes through Apex Trader Funding. And thank you all again, and our best trading days are ahead of us. Take care. Bye.
Bye.